Hey everyone, welcome to our next slide. Let me first rub this, right? But it doesn't matter. So welcome to our second slide, our next slide, not second, sorry. So this slide we'll be talking about trend lines, right? I think you've heard the term called trends, right? So let me take my pen. So what is a trend line? A trend line, these are recognizable lines that you draw as a trader on a chart, right? On a trading view or on a chart, whatever I want to draw. They connect. To connect, why do you draw those lines? So that you connect series of prices together or show some best data fit, right? You're trying to connect these little things, what we call candlestick, that I have explained earlier on. So this resulting line is then used to, right, to predict or give a traders a good idea of the direction of in which any investment value might move. So it gives us a good direction on which the investment or financial product might move its price, right? If it's going to move up, right, or down. So that's the main reason why we draw trend lines, to give us a general idea. Is it going up or is it going down, or it will move it sideways, right? So that's why we draw these trend lines. So we have what we call a trend line that is an uptrend line, what we call an uptrend line. An uptrend line, what do you mean an uptrend line? We are saying it connects higher highs, right? This is a higher high, this is a higher high, this higher is higher than this one. It connects these higher highs, so it's just connecting this. So it acts as a support, because the price is moving, like bouncing off this, right? So but in the market or in a chart, you won't see a perfect trend line, but you need to become a good trader and start to see or identify this trend line. So a trend line can be uptrend line or a downtrend line. As you can see, this is connecting higher lows. This low is lower than this higher low. This is lower than this one. So it's just connecting this series. So at the end of the day, you can have a good idea to say this one is the prices are moving up in an uptrend. That's what we call an uptrend, right? This is a downtrend. So if it's moving in an uptrend, you don't want to go against the trend. I think you've heard the saying of saying a trend is your friend, right? So if you see these kind of things, right, you need to make sure that you find an opportunity to buy. Don't find an opportunity to sell, because which means you are going against the trend. So find an opportunity to buy so that you won't go against the trend. If it's going up, make sure that you find an opportunity to go long, right, which means you're buying. If it's going down, find an opportunity to sell, right? So in uptrend, generally you are identifying support areas. So this is not a line in general, it's a area of value, right? Downtrend, you're connecting resistance line, because these prices, they are bouncing off, right? So let's go and illustrate what I'm saying. So as you can see, we have a pair which is USD Japanese yen. It's running up. These prices are moving up and up. So the first thing when you are drawing a trend line, you need to know that we are connecting what we call shadows or wicks, right? So you find what we call wicks, you zoom out, you zoom out, you zoom out like this, right? Then you can see the perfect picture, the global picture of a chart, right? So as you can see, let me take this so that we can understand. As you can see, the first trend line that you can see here, right, market's rallying up. This is a higher high, right? This is a higher high, another one is so forth, right? So we can connect these lines, right? So where do you get a trend line? If you go to a main part 2 here, you can find there is this little thing that is here, that's where you find the trend line. So that's what we call a trend line. So come and click this, then you join what you call shadows. Please be careful, you join shadows of this, right? As you can see, I'm joining shadows, these wicks, right? Try to join the shadows, right? So here I connected the shadow, another one, a shadow. So that's what we call an uptrend. So this pair, it shows that in the near future it might continue, right? Sorry about that. This should be one line, right? It should be a one line. So that's what we call an uptrend, right? So in simple terms, make sure that you connect these shadows. So most people, they try to draw using a zone and so forth, but for now let's stick to this. You can draw using, some people can connect another line here. You can put two lines, because it's an area of value, right? They can connect two lines. It's like this, right? Yeah, it's an area of value. It's not a line in general most of the time, right? It's not a line. So some people, they use these kind of techniques, but for now let's stick to this. You can use whatever you want to, right? So that's what we call a trend line. So you can draw also a trend line for an downtrend and so forth. So how do we take an opportunity to take advantage of these things? So what you need to do is to make sure that when it is this support, it's supporting the price, to say this price should move in an uptrend, right? So you need to make sure that if it hits this support line, you need to put a buying order here, because we believe that this USD Japanese is being undervalued. So it will take more Japanese yen to buy with USD, one USD. So we are believing that USD will gain in value in the near future. So you need to go long. But if it breaks out, you don't need to buy, because you are now in a different area, right? So you don't want to go against the trend, right? So that's what we call these trend lines, right? So most of the time you find out we have what we call types of trends. So we have an uptrend, a downtrend, a side trend, sideways. So a range market, what we call a range market, is moving like this. So we are connecting these points, right? So if you connect these points, right, that's what we call a support. You're connecting these prices that are bouncing off here. So you can connect these higher highs, which we what we call resistance. In a resistance, we have more sellers than buyers. So if it bounces here, you need to make sure that you take advantage of this opportunity, to say you need to find short-term opportunities, to say if it bounces, it is in line, you go short, right? So we have different types of trends. So what are the key takeaways from this? That most of the YouTubers, guys, they don't tell you is it takes at least two opposites, two tops, right, and bottoms, right? The first touch, second touch, right, it gives that there is a validity of a trend line. So first touch and second, it gives that there is a trend line, but you need to wait for the third one to give a confirmation, to say there is a line here that you need to draw, right? As I explained here, the first touch, second, third, it confirms that there is a trend line. That's why I end up drawing this, right? So you can't say the second one, now there is a trend line. First and second, it gives out that there is a trend line. The third one, it confirms that there is a trend line, right? Be very careful with this. So the steeper the trend line, so if you are saying steep in maths, we're talking about this line is more steeper than this. This is more steeper than this one, but this is more steeper than this. So we are saying the steeper a trend line is that you draw, the less reliable it is going to be. So I try to avoid trading these more steep lines. Take advantage of normal trend lines, right? You gain experience. We'll explain as we move, because if it's more steeper it will break. If it's more like this, markets are moving like this, definitely at some point it will break. So make sure that you try to avoid such things. So like horizontal support and resistance levels, trend lines become more stronger as they more test there. So as most of the time I always say books, they don't work in real markets, because they always say that if these markets tend to hit a trend line more often, it becomes strong, but it doesn't mean like that. They say if it is, at some point this thing will break. So I make sure that I trade the third one, fourth, fifth, the sixth one touches, I won't trade, because at some point it will break. So do not ever draw trend lines by forcing them. If you don't see a trend line, don't force. So if they don't fit well, don't force. So a trend line is easily identifiable. As you can see, here is a trend line. It was touching this, touching this, touching this. This is a downtrend. It shows that the market is now moving like this. So for an uptrend, it's touching this, touching this. So that's why I end up drawing a trend line. This is a sideway, right? So for a sideway, a downtrend is connecting like this, right? So you should connect with shadows, right? Make sure that connect shadows here, shadow here, shadow here, shadow here, right? So that you find a perfect trend line. So be very careful. Let's move to our next slide.